Hello everyone, and welcome back to Mr. Joe's weekly Bitcoin speculation videos, which will be known this week as the holy shit Bitcoin is still going fucking sideways episode. That sideways scenario we talked about in the video 2 weeks ago has certainly come about, with the market ranging from early $400s to $425, currently around $417 below our local $420 resistance level. That $406 long position we talked about in week 2 of March was closed out at $419 with the bearish OBV divergence. I'm currently holding a new long after dollar cost averaging purchasing below $410. I should have had more bids around $403 to $406 support as per my price support levels, but I neglected to add these since I was at my in-laws. Didn't really feel like babysitting a trade. However, I did see a few people like the ever popular Sage take the bottom here, and very well done to them. I'm sorry if I missed other Bitcoin personalities. Otherwise, we continue to consolidate within our triangle with no breakup or breakdown, but only in Bitfinex. Allow me to elaborate. There is one problem with looking at support, resistance, and volume divergences. Exchanges can have vastly different bounds due to different parameters or premiums. Indeed, China can have a premium of up to around $10 per coin. Whether or not this is due to capital controls, or apparently not according to Bobby Lee, these differences change technical analysis, which is normally subjective, and down to interpretation, to something that's even more in the grey area. As you've seen, I stick to Bitfinex charts, so I don't try to poke the wool over your eyes and quote-unquote change the charts to fit a bias. But in light of the close ranging price, however, I'd like to quickly take a look at an OKEx chart, even if I do not trade there. While Bitfinex is still within its triangle, China is even more bearish, breaking down a triangle and holding a support level at just over 2600 yuan. We can see a small retracement here, on very light bullish volume, indicating that it may retest lower levels, likely the $400 price point on BTCUSD. But the 100% retracement of that dip and coming back into triangle is undeniably bullish. With the Bollinger Bands contracting again, we may see another bullish leg, or even a trend change to bullish. Unfortunately, the volumizer does not lend itself to extensive analysis here. OBV and SVD are highly jagged, with false breakouts. The low fees and high leverage available is also more lending to a wiki price. As I said in the previous video, this consolidation period is getting very tight. It will only get tighter. While we already have a breakout on the Chinese exchanges, Bitfinex remains bullish above $400. Should you have a long above $400, this will be your stop loss. While technical analysis can be subjective over support levels due to wick length or order book density, round numbers still have significant psychological effect on the trader. This is as much true as it is in Forex as it is in Bitcoin. People just value simplicity like that. In other news, Ethereum appears to have found a high at 0.037 Ether per Bitcoin, or $15 a coin, with a sharp drop in price to support at 0.023 or approximately $10. The rapid price increase in Ethereum also correlated to a decrease in Bitcoin price, suggesting that there was a money flow from Bitcoin to Ethereum. This may be due to fear of missing out, or simply due to a lack of Bitcoin innovation and ongoing political disruption. We do see that most of the Ethereum trading volume is against Bitcoin as opposed to a fiat currency, however, so this is likely speculative traders looking to increase Bitcoin holdings prior to a prospective price pump, probably the halvening event. In any event, the price collapse after the top coincided with the third party releasing news of additional support for Bitcoin-based smart contracts, a major Ethereum selling point. However, this is after a 1500% rally, and may be a coincidence. With a sideways Bitcoin, it sadly doesn't leave me much to talk about in this Bitcoin-based series. As said in the previous video, the biggest danger to your wallet during this period is emotions and exchange fees. The Chinese exchanges did drop $12 on their triangle break to the downside, so I'd expect a similar response on Bitfinex should it break their triangle, at the very minimum. However, bulls seem to be out of hot water with the short-term 100% retracement. Otherwise, it will likely continue to range within this triangle and eventually become untradeable. Like I say in Telegram, I'm going to trade Forex to try and increase my Bitcoin holdings. Be safe out there, don't put 100% of your balance into a single trade, and don't forget to set stop losses either. Thank you very much for watching, and cheers.